Hey there, Investorholics. Welcome to another ETF Spotlight review. Today we'll be checking in on IWLD, which is the iShares Core MSCI World ex-Australia ESG Leaders ETF. So if you're interested in gaining some exposure to global companies that have a high ESG rating, then this might be something for you to have a look at. Quite possibly this is for someone looking or is happy with medium to high risk return profile. And as always, we're looking at these things in a long-term perspective, not really for short-term trading.
Hey there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up. And also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks.
Okay, so the fund aims to provide investors with the performance of the MSCI World ex-Australia Custom ESG Leaders Index before fees and expenses. So the index is designed to measure the performance of global developed markets, large and mid-cap companies with better sustainability credentials relating to their sector peers. As always, we need a reason to go into these things. So IWLD gives you access to a broad universe of large and mid-cap developed markets companies outside Australia with leading ESG practices within their particular industry segment. Number two here, avoid companies engaging in activities that are controversial or have adverse effects on the climate. Number three, use to internationally diversify your equity portfolio for the long term. So, we're always looking for long-term options here because we sort of don't want to be getting in and out of the market. We want to be staying in these investments as long as they are still performing. Okay, we had a net asset value of $45.90 at the close, trading just above that at 46.02, looking a little on the expensive side. Market cap of $249 million. Management cost is really, really good, I think, anyway, 0.09%. Semi-annual distribution January and July. Dividend yield is very high at 14.8%. This is probably something we need to keep an eye on and also do some additional research about, just trying to work out how they generate that dividend. Also something else to note really is this ETF in effect is actually quite new because they've changed the index at the start of June this year. So, I think it's something to keep an eye on. So the new index is designed to represent the performance of companies that have high environmental, social, and governance ESG ratings related to their sector peers. IWLD would be used by investors to gain exposure to leading global companies, strong focus on ESG, which we've kind of already touched on. So I suppose the benefit of the new index, it's more targeted portfolio building blocks. So it now excludes Australia because the old ETF included Australia. So a sustainable integrated benchmark, recognizing that the companies solving the world's biggest challenges are best positioned for growth. Improved tracking as well. The new benchmark with new structure of direct security holdings. I think before it was set up as they just bought an ETF, and that was kind of how it worked. Cost-effective, sustainable equity range. So 2 global equity ESG ETFs. So it's hedged and unhedged, and 1 Australian quality ESG ETF launched in June. So enhanced fund, no change in fees. Yeah, so the fees are the same, but you know, they've tried to enhance it and make it a little bit better. So I think it's still something really you almost have to let it run for 6 months. 6 to 12 months just to see how it performs. Be interesting to see if the dividend stays the same. Like I say, I think it's probably worth a deeper dive to actually see how that dividend's generated. I haven't had time to do that, so that'd be when you're doing your research. That's something else to have a look at. So also have a look at QLTY and ESGI. So another couple of different alternatives to have a look at. As always, we should be comparing different alternatives before we make a decision. And you know, if required, speak to a professional as well. Because this is not investment advice. Okay, so let's have a look at the top 10. So Apple, Microsoft, Tesla, Alphabet, Nvidia, Home Depot, ASML Holdings, Procter & Gamble, and Adobe. So really the top 10 US stock market. So you can probably get exposure to those companies through other ETFs as well, but not specifically for ESG. So I mean, if you're an ESG focused investor, that might be something to keep an eye on. So the fund in its previous form and this form has been running since 2016. If you're invested in it since 2016, you're looking at a 131% increase in your investment. So that's a cumulative increase. So you're looking at total returns for 1 year is pretty healthy here at 38%. Over 3 years, 17%, which is really good. 5 years is 16%. Since inception, 15%. So, you know, I think if you've got an ETF-based portfolio, looking for ETFs to build your core, and then looking at building these type of things on the outside to boost up your returns. So, you know, for instance, say your core is Australian ETFs, so Australian focus ETFs like something that tracks the ASX 200, and then, you know, you could get your international exposure through using something like this. So, you know, you might have, you know, 70% of your core, 70% is invested in Australian ETFs. So, you know, whether your VAS or something like that tracks ASX 300, and then you have, you know, 10% in something like IWLD, and you know, you might have own some bonds or another type of ETF that generates sort of a stable monthly income or something like that. Yeah, there's a few different options, but this one to keep an eye on for international exposure at any rate.
Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.